Good morning all and welcome to today's video. So today I have three pairs on watch. I'm going to have to speed through these quite quickly because I have a webinar to attend in about 12 minutes time. So this is going to be a very quick video, but I'm going to break these down for you now without further ado. So why am I looking at these pairs? So pound Swiss, we have this 1, 2, 3. Okay, 1, 2, 3 touch structure like so. We have a 1, 2, 3 middle section. We break below this low, catching people the wrong side of the market, and then we push up. So there's no need for us to return down to here at this moment in time. We've broken this low and broke back in. That's a tick in the box for a move to the upside. Okay. So then as we drill down, you can see the price moved up. It left a footprint. We come down. We keep near missing this footprint. And then eventually we tap into it and then we push up aggressively. So there's no reason for us to come back down to this low now, okay? We have a series of near misses up here, and that will likely mean that we will have an impulse correction continuation to push higher to take out these near misses and this high, which we near missed to last time around, and potentially move back up, back within this piece of structure, so to the upside and towards these highs here. But that is potentially a long way away. So on the lower time frames, you can see that we left a footprint again. We come back down, we tapped into it, but we moved up in a non-progressive way. So this is giving me a clue that this is potentially just an impulse correction continuation, as I've talked about previously, to tap into this low before that longer term move to the upside. Okay, and this would just be an impulse correction continuation to push higher. Okay, particularly when we had this near miss here, this wick near missed this area of value, and it did so by way of a bearish wick. These bearish wicks often get filled, particularly when they're a bearish wick on the daily chart. You can see I've talked about these on the flip side. A very bearish candle with a big red wick beneath it, they usually get filled, particularly if they've near missed an area of value, especially if that's the case on the 4 hour as well. You can see that one there, and on the 1 hour we have a bearish wick there that kind of filled that one. But when we have a 4 hour and a daily wick, that usually implies that the wick will be filled. We'll tap into the area of value and then push up. You can see that we also have a kind of this 1, 2, 3 structure there, a 1, 2, 3 last leg with a 1, 2, 3 middle section. That also implies a move up. So what I'll be looking for from this pair today is as follows. So I've set an alert to see if we push up, but now that we've tapped into that area of value, I'll be looking for a push up followed by a flag. This is a very large piece of structure, so I'll be looking for a push up and a flag, and then I'll be looking to get long at the break of a flag or within it, and then I'll be able to manage this up to these highs as a first target for something in the region of 8 to 9%, depending on the size of the flag, where it forms, etc. So a little alert to see if we can push up. If that does not trigger, no trade for me. So dollar CAD rather. Let's analyze this on the higher time frames. So on the higher time frames, you can see that we've kind of near missed this area, but we've tapped into this significant high. Okay, so it's partly why this is lower down on the list is because we have a near miss to this high, which could get filled, but that doesn't mean to say that it will get filled straight away. Sometimes these setups can be less reliable because if you have a near miss to the upside, then as you're trying to sell this, sometimes there can be orders being placed above price, which cause slightly more erratic and unpredictable price action. But you can see we have well and truly, if we just zoom out to the weekly, we've well and truly washed out the liquidity that was here. So potentially we could be seeing a move down to this low, okay? Or even just this low, but more so this is a first target. If we just drill out to the monthly, you can see we've tapped into that area. Some serious momentum by way of this monthly close, and this to me looks like the solid target if we drill out to the higher time frames, because of course the higher time frames hold more weight. Okay, so a bit of an unusual sequence. Normally we see the tighter flags into the larger flags, but nevertheless, that is partly why this is lower down on the list. But you can see that price left us with a footprint and it's come back up. So what I'll be looking for today is the following. Okay, you can see these little tighter corrections, and this was kind of the origin of this, the high of this structure here. So maybe that's where we're snapping back to. And if we do, this kind of in line with the DXY, the dollar index looks like it's about to push a little bit higher before that potential move to the downside, which we're looking for. So it wouldn't surprise me if dollar CAD pushes a little bit higher too. So with that in mind, what I'll be looking for is price to tap into this area of value and then a subsequent push down on the flag, and then I'll be looking to get short, and I'll be able to manage this down to this low just in case price came back up. Just in case we ended up with a middle section that came back up, tapped into the high, and went like that, I'd still be able to manage this down to these lows for something in the region of 10 to 11%. So that is dollar CAD. I have an alert set just below the area of value. If that does not trigger, then no trade for me. Euro pound. This is slightly lower down on the list just because of the positioning where the trade is potentially positioned. If we look at this, okay, if we assume that that's our high and that's our low, we are positioned further up in the run, where it's more likely that sellers will be getting in rather than getting out. With euro pound, we're slightly further down. This does increase the likelihood of us of price pushing down to this lows, but obviously it's not as well positioned, because as we get closer to these lows, some people may start to take profit, which may cause that slightly more erratic price action. But nevertheless, it's largely down to the positioning why I have my pairs in the order that I have them. But anyway, on the higher time frames, you can see that we've tapped into this exchange of liquidity. We did so by way of a 1, 2, 3, which had a 1, 2, 3 middle section. Okay, we pushed down, we broke this low. Okay, we completely smashed through it, giving me a clue that we will likely, if we just zoom out, likely take out this low now, okay, as a solid first target. You can see that we've had that impulse correction, potential continuation to push lower, and if this was to push lower, then we would likely take out that low. So what I'll be looking for now is the following. Quite simply, I'll be looking for price to tap into the area of value. Let's get that off the chart. Tap into that area of value, that wick. You can see that we kind of have that impulse correction, potential continuation. We have a 1, 2, 3 middle section. We find liquidity from this area here, and we seem to be pushing back up, most likely to tap into that high there. So if we do, I'll be looking for the push down on the flag, and then I'll be looking to get short on the break of the flag or within it. And that's all I'm going to be looking for today. I have an alert set just below that area of value. If it does not trigger, then I'll not be looking to place a trade. Thanks for watching, folks. I'll see you in the next video. Enjoy the rest of your day.